Hello, everybody. CPI day. Hope everyone's doing okay. Yes, we're going to cover live cattle today. Hi, James, Hugo. Hi, Ryan. I'm so glad you're back. I know it's frustrating to have tech issues. Missed your insights. Hi, Kman. And Richard, you were first today. Alexander's not here. Okay.
Early morning, Dale.
Hi, Kman. How are you? So,
very well, thank you.
Yeah. Anyway, I just wanted to point out this silver playing with the 50% level. Maybe it's going to go 61.8 because gold certainly has. We'll see what happens on the CPI. I would love for crude to make one more high at 93.5. Let's see if that happens in the coming days. And I don't know what to do with the S&Ps. And yen is still trying. I still think this line is a magnet up there above 117. So we'll see if we get a hot number. That's what you were talking about yesterday, Kman, that will could have a hot number because of used cars.
Yeah. And also on the noteworthy on the yen today is a Bank of Japan statement earlier this morning saying that on Monday they will buy, and if needed, an unlimited amount of 10-year JGBs at 0.25%. We tested it this morning and shying off just a little bit, but the yen weakened a tad on the back of it. So for the time being, Bank of Japan still wants to be at the queue, at the end of the queue of the central banks. So that statement woke up a few yen sellers this morning.
Yeah, I know that DSI is getting down there a little bit too. So, it could be a good setup up there if it gets up there. Would you have any fundamental argument if the U.S. dollar yen heads up towards 117, why it might be an important high? Did you think of anything?
On the fundamentals side, I think it's going to be a wait for the next Bank of Japan meetings. Really, if they really keep themselves right at the back end of the queue, the more open side maybe for Yen Crosses to go up a bit higher still. We are very close to important levels on Aussie yen, Kiwi yen. They have been tested this morning and so far capped. There's a trend line coming in there from this high in October over the early 2022 high. It's right there. We've tested it this morning and capped. So Kiwi yen exactly the same. So those things are very important to watch. If we manage to break through those, it's likely going to take the yen with it, right?
Okay, Ryan, are you okay, buddy? I guess he still can't talk, huh? Okay, because I saw some Skype action from him.
Hello.
Oh, look,
there he is. Oh, there we are. There, right, right setting. Got the right setting. I was talking earlier, and I wondered why I was listening.
Sounds of silence. Simon and Garfunkel.
Been one of those weeks.
Good to have you back, man.
Thanks, mate.
I know that when you're down, kind of, it's hard to, get your sea legs back a little bit. Anything you're looking for to react on the number here today?
Yeah, I think it's going to be key to what we're going to do in particular for something like euro dollar. There's obviously going to be various scenarios. If it's a big beat, a big miss, a small. I think if we're in sort of 5 pips range plus or minus the numbers, I don't think we're going to get that much of a market reaction. So expecting 7.3 from a prior 7.0 in CPI. So if it comes in 6.5, 7.5, it's not going to change the picture. What I think the market is pricing around is whether it's going to be a 25 pip hike or a 50 pip hike. So if we're higher than 7.5 or we're at 7.5 or more, then we're going to price in a 50 pip hike. If it's back down towards the sevens, maybe 6.5, that sort of thing, then we're going to price out a 50 pip hike, but it won't change the path of rate hikes because we're still talking elevated levels. So unless it's something stupid like a 5% or less, It's going to be about how we're pricing 25 or 50 pips.
Okay. All right. So, Stel, you around?
I am. Good morning.
Morning, mate.
So, there you go. Silver's taking out the 50%. Looks like it may want 61.8. I mean, gold already. I didn't do the fibs on it, but this looks even higher than 61.8. Maybe we're at 78.6 there.
Well, let's see after the CPI what happens. But I've said before on the metals, I still think we're not for us bulls. We're not out of the woods yet. I still think there's a good chance of another flush lower. But we wait and see price action.
The bears better come to stop this attack here pretty soon. They get over 1858. These highs here.
Yeah,
and we're like one good day away.
Yes,
you'll have an upside breakout. So
yeah, above those levels, I think that's a very positive development for gold.
Yeah.
I was going to mention actually Sweden and Norway. I don't know if you guys saw. First of all,
they won some Olympic medals. Norway. I mean, are you trading in NOK based upon? I mean, they're cleaning up again in Beijing. Does that have anything to do with your fundamental analysis?
Most likely. I'll tell you what. There are no Greek medals. That's for sure.
You guys can't ski, can you?
It was the other week.
Yeah. No, but seriously, we had
snowmen.
Yeah, exactly. Now we had Norway CPI, which from last reading at 5.3%, expected at 4.2. This is year on year, came in at 3.2. So that was a big miss. And also we had the Riksbank with a dovish hold. And so they it's coming out a little bit dovish from them. And I do think, even though in the long run, I'm quite bullish the krona, which is one of the currencies we cover at ForexAnalytix, I think that the chances for a bullish breakout in dollar Norway and probably more likely euro Norway, I think is more probable. I would love to get one so that I can sell into it, but at the moment I'm just watching it. Our friend DJ wrote that Sweden declared the pandemic is over. Yeah, so many countries that are now opening up pretty much everything.
How about Greece?
We're getting there. I'm hearing rumors from. Remember, I have a friend who's a minister. Oh, he used to be a minister. Now he's the spokesman for the ruling party. But anyway, he told me that we're getting close to actually kind of releasing everything because at the end of the day, sorry.
You want the tourism this summer.
Exactly. We're a little bit slower than everybody else because we want to make sure we get the summer season right. But I think most countries now realizing that the worst is behind us, and this Omicron or whatever new variations we're going to get are probably going to be less severe as we go forward. So why destroy the economy? We've done enough damage already. Anyway, so. We wait for CPI.
Can we speak? And good morning, guys. How are you? Happy. Hey, can I just really quick just say something about this?
Yes, sir.
Stella, and by the way, if my wife hears this recording for some reason, happy 50th
happy birthday.
Happy birthday, Lisa. It's
happy
her 50.
birthday.
It's her 50 this year. So
you meant to say 30.
I'll sing it.
I meant to say 29. Correct.
Give her your headset. We'll sing happy birthday.
We were talking about this because my wife, obviously for her 50th birthday, she wants to do something special. And she's, shopping around for, for us to fly around, during spring break. It's still a little chilly here, so we're going to celebrate maybe a month or two down the road. Anyway, I mean, it's 50, right? You got to. But the thing is she said prices on everything are like ridiculous everywhere. Like, she's shopping everywhere, and it's just, prices are out of control. So, I mean, and I know here we are coming out of COVID, and everybody wants to travel, right?
Yeah. I'll tell you what, Blake, last summer, in June, so it's not peak season. We rented the villa with my brother. Came from London. A friend of mine came from Belgium. We rented the villa. Same villa we want to rent. Same week this year. 40% higher. 40.
That's what she was saying. Is like everything's about 30% higher right now, and that's
ridiculous.
Nuts. It's nuts. But anyway, I just had to throw that in. I mean, when we're talking about inflationary data, now you look at today's rally, and I'm gonna shut up because I know you guys have other things to say before I start interjecting here. But one of the reasons why the stock market is at these levels, like you have the S&P back at 4,600, is the optimism that inflationary data is gonna peak and it's gonna come off. And there's a lot of optimism out there that that's what's happening right now. And the market's trying to get ahead of it. I don't know if I'm quite there, and I'm going to let you guys continue on. I'll like I said, I'm going to interject my thoughts in a few minutes, but I just need to throw that all out there. All right.
Okay.
Go ahead.
Thank you, Blake.
All right. So guys, I don't know, Blake will talk about the S&Ps, but in fact, Blake made the call that you'd most likely be able to sell it up around 46.20, which is where this 50-day, it's a 50-day 46.19. I didn't do the fib work on it, but I assume we're probably 61.8 back here, and this was a pretty important breakdown low, wasn't it? I mean, we held it, and we're right there. So
yep,
we'll see.
It's exactly what I wrote on the chat room this morning. I said I want to be selling around here 4,600, pretty tight stop above. I think it's the right trade to have ahead of the CPI. And then I realized Blake already had the pip with pretty much the same levels I would have put in. And that 50 DMA could be a nice little resistance there. But the question is, what scenario do we think is going to bring equities lower? High inflation or low inflation? Theoretically, the old normal was high inflation, good for the economy, stocks higher. Now it's the opposite. So, if we get a hot inflation, I think equities are going to be under pressure. So,
but haven't we got hot inflation already? We got a Fed who's decided on whether to hike 25 or 50 points. We've got hot inflation already, looking to get hotter. We've had the dip, and it's still rallying. If it can't dip bigger than that over everything that's being thrown at it, how's it gonna dip from here? I'm not saying anyone's wrong, but just looking at the price action, it should have continued that move lower if these worries about inflation were real. But it just looks like another,
it needs a new worry. Needs a new worry, right? Yeah,
exactly. I mean, one of the things we were talking about this morning in the room is that there's more inversion on the curve in bonds. It's weird. They're pretty much
flattening,
inversion in different tenors, depending on what you're looking at. We saw it before, further out the curve. The market seems to be pricing out the future for rate hikes before we've even had the first one. It's already saying they're going to go into reverse, and the Fed are going to be forced to, or not hike as far, or reverse hikes later down the road. Pretty similar to what they did, when we came through, 2015. They were from 2015 they were hiking. 2019 they were cutting.
Yeah.
Well, do you blame the markets? I mean, this is what's been happening the last two times. So it's not gone this far. We haven't priced the end of hikes or possible reversal hikes before we've even had a hike in the last two hike cycles. It's like the market's running far ahead of itself than what it does normally.
That's what I was trying to say yesterday to Kman. I mean, when you look at, we almost got to 2%. So I know I made a call for 2% by year end, but so, things always take longer than expected, but the market's already priced in at a 2% 10-year. Don't you think at least a half a point?
Yeah, it's not even letting it get there, is it? I think we'll see if it's going to be 25 or 50 pip hike, then we'll know what we're going to get in something like the 10 years. And if it's 50, then the 2% mark's going to get blown out the water. But as far as stocks go, it's going to need two things going to happen. Either the economy picks up post-virus or getting through the virus, and you have a solid upward trajectory in the economy for a good long while, and hikes will follow it along. And then you'll get the bond market changing its course for inversion and stuff. Or we get the similar situations of 2018, 2019, where the economy stutters after we've hiked, and then we're looking at rate cuts again.
Hey, Ryan, good morning. By the way, I'm glad to hear that your internet's come on better. You sound great, by the way. So
lovely, thank you.
I know
the internet makes my voice sounds better.
Well, you have a great face for radio. We all agree. But I just wanted to say that Don't worry, I got the best face for radio, so don't worry about that. But no, I just wanted to say that living in a third world country like you do, now that you're outside the EU, it's nice that you guys have some good internet. I actually wanted to stop really quick since you were talking about rates, and I wanted to go over to the 10-year in the bond market. And this is something I talked about with Chris Weston at Pepperstone last night, and I want to show you. This is like my chart of the day. This is the 10-year, and this is the actual bonds, not yields, right? So this is the ZNs that I trade futures on the ZNs right here. And I'll tell you what, we are at, you take this 2018 low to 2020 high, we're at the 618 retracement, divergent relative strength. Now, one of the things that has stopped the market from, stopped the NASDAQ from bouncing as aggressively as the other markets is we've had, this rally in yields. I think most people believe that that us getting above 2% on the 10-year is not going to happen. Matter of fact, I think most people believe that we might probe that area and we're not going to get above it, at least not right now. So I think a lot of the markets right now probably feel, and this is one of the reasons why I believe stocks are actually supported at these levels, is because they feel that we are at the top of rates. We're not going to see rates above 2% on the 10-year pretty soon. And, that flattening of the curve is probably going to, probably ease off a little bit. But I don't necessarily agree with that, but I'm just saying that I think the market feels confident in buying equities at these levels because they feel that rates will come down from current levels. And if you look at the 618 retracement, I mean, there's a lot of, you could argue that we should bounce here. But how about if we don't? I mean, that's the question, right? How about if yields rip today? How about if inflation data, White House warned us yesterday, the inflation data is going to be strong. The market's optimistic that, it's going to be contained. But let's say that the data is hot and rates fly. What happens then? What happens if we blow through this and the 10-year is above 2% today? What would you guys do in that instance? Like, what are your thoughts?
I would just short equities above 2%.
Okay. Yeah, you've been saying that for like a year,
but I haven't done it yet, have I?
But I have to give you credit. But it's not like you've changed your tune. You've actually been saying this for like a year. Like, if the yield on the 10-year ever gets to 2%, I'm selling stocks. I mean, that's been your same message for like a year. So kudos to you.
Sales ideas won't satisfy someone who needs frequency. But, I've been here, it's going to be year 5 in April. And if you just wait for a lot of his long-term calls, they manifest.
Oh, I mean, we look at these, on ForexAnalytix, we have patterns in play, right? So patterns in play are, when we see technical patterns or, macro patterns for Stelios, they develop in the market and then we put them out there for everybody to see. We adjust the stops and limits and, but they're more, it's not like intraday trading. All the intraday stuff is in our chat rooms. But when Stelios puts out something on, the patterns in play, and we've kept all of them for like the last 5 years. So you can go back and go through each and every one of them for the last 5 years and sift through all this data. Whenever Stelios puts something out, I usually go, oh, I need to pay attention to that. So, so Stelios, he's been talking about this for a long time, as Dale pointed out. And look, I think if we break through here, you got to take note of it. But I wanted to say everybody's getting ahead of this in the stock market. Everybody's very confident that, the Fed's going to, we're going to start to see inflation really peak here. The Fed's going to be able to, ease off the gas pedal a little bit as far as rhetoric goes. Expectations are going to moderate a little bit, and equities are going to see all-time highs, and we're going to continue to break higher in equities now. So you see this S&P here, pushing up against key resistance. But my 2 cents is today, post data, if the data is, let's just say the data is in line. What numbers are you guys looking for? Just rattle them off really quick. Stelios, Ryan,
the expected numbers.
Yeah, and what you guys think, really quick, just real quick.
We're expecting 7.3 in CPI versus 7.0 prior. Core is expected up at 5.9 versus 5.5 prior. As I said, within 5 pips either side of that, I think it's a nothing move, just a bit of jiggling around. Anything outside of that range, then we're going to see the markets repricing, whether it's going to be 25 pips or 50 pips.
Okay, Ryan, you have any opinion here?
That was me.
I mean, I'm sorry, Kman. Sorry. And so, Ryan, once again,
that was a really bad Stelios. Impression.
Can you say that one more time, please? No, I'm sorry, Kman. If you're here, do you have any opinion? Sorry, 7%.
No, nothing spectacular. I was just updating the room this morning that this 113.90, 114, the figure, and on the other side, 114.85, we'll call it 115 psychologically is mega for the medium term euro dollar. I think if break back below, we are going back into the box, and but if you break 115, it's probably going to trigger model accounts buying. So
yeah, we're going to talk about that here in just a second. And thank you for your thoughts. Stelios, do you have any opinion on what you think CPI is going to be today?
I think I don't think we're going to see a big surprise. I probably think we might see a slight miss. As it has been the case recently on another few prints, but really I don't see any change as long as oil is up here and energy prices are still high. I don't see how inflation is going to be lower. But yeah, I think broadly in line. Sorry, I don't have much anything more interesting to say.
Okay, and I heard Steve's voice. Steve, do you have just a quick opinion, because what I wanted to go over something really quick. So.
I can give you a prediction that can't really go wrong. I have no idea what's going to happen with this print. Any print can go either way. What I can tell you though is that even if, let's say, it's a miss, right, and we have a lower inflation print, you cannot fight inflation with deeply negative interest rates. So even if it's lower than the market expects, I don't think it changes anything in the grand scheme of things. And I don't think it's going to signal some kind of a change in trend having to do with inflation. So any reaction to lower than expected inflation, in my opinion, is going to be transitory. Yeah, exactly.
Okay, I'm glad you brought that up. And so, let's talk about this inflationary print. And I appreciate your thoughts, Steve. I'm kind of with you. Let's say that the number comes in line. I mean, investing.com has 7.3%. Data Flash has 7%. Everybody's looking for around 7 on year over year CPI. Let's say it comes in at 7%. I mean, like I said, one of the things that the White House said is expect a high inflationary data. If you're talking to the average American that the White House is talking to, we just see 6.5%, 6%, 7%, 8%, doesn't matter. That's high. It doesn't, I'm not sitting here trying to, sift through the data. I'm just going, oh my God, that inflationary pressures like that. Holy cow, then I'm going to stop spending, right? That's what the average American is thinking. So we're more focused on the actual data itself as traders. So if the data does come in line, let's say 7%, maybe 6.9%, whatever it is, slightly better than expected, I'm with Steve. Any rally that we see in equities is going to be short-lived. It has to be a real big miss, like a really big miss for me to go, all right, I don't see that. But anything that's in line or a slight miss, like I said, just a slight miss, what I think is going to happen is we're going to probe right above, this resistance, trip all the stops right above the highs, and then we're going to go whoop, whoop, and right back down again. And like Steve just said, it's going to be transitory. So that's why, you guys got to be really careful playing the dollar. And I think I got to say that I've got to say my piece about the dollar. I am very bullish the euro. But I don't, that doesn't make me long the euro right now. I bought it at 114 this week. I sold it at 114.33 or 35, yesterday. I'm not in it right now. I do want to buy it once it dips below this support. I'm sorry, got the wrong line here. Let it break through that support, buy a dip below 114 and look for an eventual break above 115. Very shallow pullbacks. This is a flag pattern. And when you have a shallow pullback, if something does not go down, usually only has one other direction to go. And when you got a full-on false breakdown of the euro here, there's a lot of people that are short from here, hoping we get below here, but we start getting above here and we will be seeing up there. And that's my analysis with the euro going into today. So I'm just hoping for a slight miss, a slight miss. But if we get even, some strong data, I think a push down to 114 is going to be very well supported, maybe even 113.90, 113.70. And I'm looking for longs down there, to be honest. And, but, going back to what, the transitory low inflation. Yeah, I think you've got opportunities in either direction today. So it's going to be really interesting, here in a few minutes. So any last, and oh wait, I need to throw this out there. And Kman said, if we get above 115, a lot of model funds will be starting to buy. That's coming from a guy that's been on the currency trading desk for 35, 40 years. So and sorry, Kman, I don't want to make that sound like a bad thing. No, but a guy that spent a lot of time on trade desk.
He slept on that desk.
He did. Okay. He slept on desk. He did in Japan. But I'm going to tell you, above 115, we've got that last minor trend line that comes through there. You take those peaks back in May of 2021. That comes in at around the 115 level. We get above 115, we should see 117 in fairly short order. So it's something that I'm going to be watching here in the coming days. So any last thoughts? We have 3 minutes before the data comes out, guys.
I can tell you that was not an exaggeration. I've told the story before to Dale, my uncle that got me the disease of the markets. He was a treasurer for very big banks. He was literally sleeping at the trading floor like 2-3 times per week, literally.
I think that happens to every trader, right?
Yeah.
I did sleep under the desk, but not 2 or 3 times per week.
No. He did, because he wanted to do some transactions in the US as well. And back then, I'm talking about now 25, 30 years ago, right? So back then everything was by phone.
Yeah.
Tell it.
Well, hey guys, we literally have 2 minutes before the data comes out. Any last minute views before this market breaks?
I think we all covered it. I think
Dale didn't give his view. Dale, you have any opinions here?
Yeah, silver's at 50%. I would be looking to fade metals on if it's a hot number.
Okay, well, we got gold stuck in the middle of this big triangle, right at the upper end of it, and we do have silver that's probing. What I've seen is the 2340 is really big resistance. We talked about that on you can see right here. 2335 was resistance yesterday on silver that we noted, and so that's some pretty big resistance. So you're looking to fade this right here.
Yeah, they might try and spike over that intraday, see what kind of.
I think you got to be careful of spikes today. I think you got to be careful of stop runs today, right? I think
exactly.
Kman.
That's why you react to the reaction.
Watch out for saloon doors today.
What'd you say?
Well, watch out for the saloon doors today. They hit you.
They swing both ways, right?
Yeah, that's a good. Kman's got 1 million of them.
He's got a lot of good ones. Saloon doors. You must be watching Yellowstone. I'm telling you. And by the way, if you guys
years in dealing rooms.
In the dealing room, right?
Saying for everything.
All right, guys. So we have about 30 seconds left. Let me pull up charts that I think are going to be. Well, first of all, we want to keep the dollar up. So let's pull up the dollar. We're going to pull up a 5-minute chart. Actually, I'm going to keep it a little bit, since we're going right to a interview right after this for Dale. But we have the dollar index. I'm going to put the S&P right here. I'm going to put that on a 5-minute chart. And then what I'm going to do, let's keep the S&P. We actually should probably put the NASDAQ up there, but it's all right. I want to see the broader markets. The dollar's on the left, S&P's on the right. Let's pull up the data flash.
7.5 and 6%, so marginally better.
Wow, that's hot. Stocks are not going to like that, right?
You mean marginally worse, right?
Look at that. Wow. Look at the dollar just popping, just ripping here. And I might take my dollar MEX off. And whoa, man.
Look at USD CAD. I'd be careful if you're still short CAD.
But how many people have been sitting there? How many people have been sitting there thinking, wow, this is going to be, we're going to start to see inflation become tame. Look, the whole market was playing into that narrative. And now, you're seeing that reverse, right?
Yeah. Pretty good hit in gold and,
actually, you know what? I just got triggered along in the euro dollar. I forgot I had a bid out there at 114.09. I'm going to have to go ahead and get out of that.
10-year US 197, by the way, creeping higher.
Let's see. I'm going to take that off just for
S&P
1 pip loss. That's fine. I forgot I had that order out there. So, I don't want to be doing that just yet. I'll buy the euro a little bit lower if I can get it today. Anyway, hey guys, I want to say, look, this is where all the action is right here. And this is the ForexAnalytix chat room. You can see everybody's chatting around, and I'll just give you guys a little flavor. I've been in front of my computer this is a day before, CPI. So there's not a lot of charts because we're all kind of waiting. This is where I got up right here. Good morning, everybody. That was about an hour and a half ago. This is just the general chat room. That's not the macro chat room. That's not the news and research room. That's not the trades room. This is just the general chat room. That's over the last hour and a half. So if you guys want to be in one of the most active trading communities, be part of ForexAnalytix. It's $1 for 10 days to try it out. Download the mobile app. We even give you a mobile app. And so check us out. Dale, I'm going to pass over to you. But before I do that, I need to say, hey, if you guys haven't registered for this webinar, this is how to supercharge your trading. Remember, it's a big secret. We're not telling anybody what's going on here until you come listen in next week. I put it to everybody. It's on the 15th. It could potentially change the way you trade the markets forever. So come in. It's free to attend. Come in and listen in, and all of you guys are invited. So, and I hope to see you there. Kman, Ryan, Stelios, Steve, and of course our wonderful hostess with the mostest, Dale. Thank you, guys. Dale,
cheers, guys.
Have a great interview.
Bye, guys.
All right, thank you,
Bye-bye.
team. Danny Nez, welcome
Good
to
morning.
F.A.C.E. I've been looking forward to speaking with you, Danny.
Good morning. Same here. What's up with this? We don't come on video. Everybody everybody a little
sure.
shy?
Go ahead. Have you been on Zoom before?
Oh, maybe a few hundred.
Okay, if
times.
you want to be on video, just click the start video. I'll join you.
Sure. What's going on? There we go. Some brave faces.
All right, Danny.
All right. I love it.
Good to meet you. I wanted to talk markets, and maybe we'll do that and lay up a few charts. But
Sure.
I did go to your website. I know a little bit about your journey, and you were in the service. You're in the Navy for a long time. You saw the world. Where are you now?
In Brooklyn.
Okay.
Came back home. I'm a New York boy.
Okay.
Well, the weather now is kind of getting me thinking I need to go back down south for a little bit. That's where I was stationed. So I might have to do that to escape for a little while.
Yeah, I mean, someone that's seen the whole world. Do you ever worry about the state of what's going on here in the U.S. and
not really.
it's just just trade, right? And
Yeah, I mean,
takes
listen,
care of itself.
I've been on this earth for 40 years, and a lot has happened.
That's why you're a pup.
Yeah, I'm always going to be a pup. But the reality is, just like the markets, the world goes in cycles. Things happen. It's life, right? And we have to move forward. It's hard to get mired down too deep with what's going on. Just focus on what you have control of. A lot of these macro events, we have no control over them. So why worry about something you can't control? Worry about what's in your control, and that's what we're doing here with trading.
Well, I always say, don't tell me worrying doesn't work, because almost everything I worry about doesn't happen.
Yeah.
All right. So anyway, I wanted to talk to you about like this recent inflation print and what you do and how you got from point A to point B. I know you ran some other businesses.
Yeah.
Tell us what you were doing and what it was like for you, say your first foray into the trading business.
Yeah, really great question. So I've been an entrepreneur my whole life. Once I got out of the Navy, I kind of had that mindset and discipline that yes, I was going to work for somebody, but my mind was, I want to be an entrepreneur. I want to do something that I love. And I fell into art really early, in my early 20s. And that led to starting like a freelance graphic design company, which led to web development when web started to get big in the early 2000s. That led to social media marketing when all the social media companies started coming out in the mid 2000s. And that led me down a road where I started a textile studio with a partner of mine that I met through my marketing company. And we've been running that for the last 13 years. All throughout that, around 2008, I really got interested in trading. When the market crashed from the housing bubble, I saw a lot of opportunities there. I had some cash on the side. I dabbled in day trading, have no idea what I was doing at that time. And that was my first real taste. But going a little further back in the 80s, growing up with computers, I always watched my dad. He had his spreadsheets. First, it was handheld spreadsheets. Then it was Excel. And I always watched him doing his mutual funds and the stocks. And I thought that was really interesting. So fast forward back to 2008. Got really involved at that time, but then my business really started to take off. So I didn't have time to trade. And it wasn't until about 10 years later, right around 17, when Bitcoin started to really kick off. That's really what got me. That's the bug that got me. And made a lot of money, lost a good amount of it. And but I learned at that time, I need to learn technical analysis. I really gotta get deep into this.
Who were your influences for that?
Well, honestly, I didn't go down the traditional route of buying books and everything like that. I had a couple of friends that actually saw that I was trading and they invited me into their groups. And so it was really at that time where I was just learning from a handful, like 6, 7 other traders that were doing different things. That's really what got me, learning. It wasn't until later on that, I was buying books and watching courses and things like that.
You had mentors. You had mentors that were friends. How fortunate to not have to have a great sense of discernment and have to wade through the garbage that's out there, right?
Yeah, and that's one of the reasons why I coach now, because I realize, going through the trading journey is very lonely. And most people just don't have people in their circle that are actively trading. And it's hard when you don't have somebody to talk to, when you don't have somebody to show a chart and ask a question.
I know what you mean, Danny.
Yeah.
I'm lonely.
So
I'm
lonely.
Mr. Lonely.
So
I've
lonely.
got nobody to call on the phone. So that's my big belief in communities, Danny.
Yeah.
You and I were talking to each other right now. We each only have 2 eyes. In your community, and I bet your students, because people call me coach too.
Yeah.
When you see your students succeed, isn't it a win and on your P&L, even though it doesn't show up?
It's huge. I still get messages from people that I worked with in 2020. You changed my life. Like, there's nothing I could say or do to thank you. I get random things in the mail. I had a guy order 2 pizzas from my favorite pizza place here in Brooklyn, have it delivered. Like, this was going back a few months ago.
Okay.
I mean, it's awesome. But honestly, I only do it because it was done for me. And I see in my experience what it did for me, and I'm like, I got to be able to pay back, because honestly, a lot of people got sucked into the market in 2020, and most of the money that they made, they probably gave back last year. And so I'm trying to help them navigate. Yeah,
1 week options that were
but even the growth stocks. I mean, look what's happened to the growth stocks and tech stocks over the last 3 months. I mean, they've been absolutely crushed. Some are down 60, 70%. So
that's a good segue. Do you have an overall narrative for the market, or it really doesn't matter? You treat each sector and stock within the sector as an individual like entity,
Yeah.
like an organism, and you could have an overall view that may not be constructive. The big question right now is, Danny, do you think the low we had 2 weeks ago from Monday is going to hold?
I don't think
and
so.
we're on our way. You don't think
I don't
so?
think so. I don't think so.
Okay.
So one of the things that I've really studied over the last year is Elliott wave. And I've gotten pretty deep into it. And I have a community of Ellioticians that I work with. And a lot of them feel, and I feel the same, that this could be just a corrective B wave on the way back up. And so that's I'm leaning that way. Of course, I never want to have any bias in any direction. I kind of let the charts speak for themselves. And if you look back to the COVID low, right, the move that we made from January to March of 20, you know, there's anytime you have a move to the downside, there's always going to be counter trend rallies. And this looks like a counter trend rally. And so that's what's in the back of my head. But the good thing is it's very tradable, right? We've seen some really violent moves up to the upside. Some are hard to catch because they're overnight, and so they're not during normal hours. But yeah, I mean, listen, I think we've had some really nice counter trend rally moves to the upside. And so for me, very tradable, but I'm always going to have in the back of my head, I have to be cautious. And the reality is we could still revisit the previous highs and still be putting in a corrective flat, right? So that's a flat that would go right back up to the highs, and we could still see a wave C down. So that's going to be
irregular B.
Yeah.
Okay. Do you know that R.N. Elliott was compulsive? People always wanted to know why he, waved at everybody. So it's because he was impulsive. and his wife was corrective. So that's my story. About there's so many different counts. How do you handle all the alternate counts in Elliott? That's what I interview a lot of practitioners.
Yeah.
And for one market you could have so many different counts.
Yeah.
And they all look valid.
Yep.
I guess Elliott is about adjusting.
Correct.
To
just on the fly.
You're adjusting to, you're reassessing all the time. Does this change the structure? So do you have like a lot of Ellioticians preferred and then an alternate count?
Yeah, you always have to have an alternate count, but it's like going into a day, especially when you're day trading, you have to have a trade to the upside and a trade to the downside. Otherwise you're going to be surprised. So I never go into any day without plan A and plan B. When it comes to waves, I prefer to stay on the higher time frames unless I'm day trading. Then I'll go down to a lower time frame and I'll look for lower time frame waves.
Like
but
4
for the
hours,
most part,
4 hour,
30 minute. I'm looking
even that time. Yeah. Okay. I'll confess I use the 15 sometimes.
Yeah. I mean, and again, that's really from a day trading perspective. I mostly day trade 3 to 5 minute and then 15 to 30 to look for structure. And then when I'm swing trading, I'm 65 minute, 4 hour, and then above, sometimes daily, weekly to see the trend.
Look at silver and gold. Do you think they got the buy stops here and the sell stops here?
Yeah, that would make a lot of sense.
I mean, my Twitter handle, Forex Stop Hunter. All right.
Yeah.
I remember on the floor, they used to, know where I would be a runner, Danny. I'd hand them the order. And if it had STP after it, they were very interested. And they kept that deck, and everyone knew where they could gun for the stops to use that liquidity to cover or take a position. So don't tell me stop hunts don't happen anymore.
That's wicked.
We don't have open outcry, right?
Yeah, that's wicked on both sides right there.
Yeah. So, and we're getting a pretty good sell-off in S&Ps with that hot number today. And also yields. Let's see if yields got to 2% on that, 197. So 198.5. So what's your take after this inflation number? And what kind of instruments do you trade, Danny, and teach people to trade? Is it options? Is it ETFs? What's your poison?
So I'm mostly, from a day trading perspective, I'm mostly an options trader. I like to trade weeklies and 1 week out, depending on the stock or the ticker. And for swing trading, I in this environment, I prefer shares, only because there's just so much whipsaw action back and forth. I'm not interested in playing the volatility in that sense. So I'm mostly going long in shares on stocks, U.S. stocks.
Well,
But I don't dip too much into metals or into Forex.
Okay, so you're mainly rotating in different sectors in the equity market. And
yeah, I mean, the interesting thing, we've mostly seen tech, obviously, in the last 2 years ripping. And, the name of the story was it would rotate out into financials, into oil and gas for a couple of days or a few days, and it would rotate right back into tech. But now what we're seeing is a bigger rotation into oil and gas, and it's staying there. And so it's not, it's not the same market as 2020. It's not the same market as 2021. It's its own animal. And so when you trade a certain way and you're locked into trading that way, you're going to miss a lot of these moves. And so I had to kind of rethink, all right, so tech is not really where it's at right now. What else is out there? And so I've had some really good success trading some oil and gas names, Exxon Mobil, Antero Resources, even some, like copper plays, like Southern Copper Company, SCCO.
Okay, so you're becoming an equity, you're gravitating towards where the strength is, and that's the commodity markets. But at the same time, do you think oil at $90 is overdone?
It might be. I mean, I think we're probably closer to a top than we are to a bottom, but we could still rip to $100. I mean, you have to also think about what's going on geopolitically in Eastern Europe. That certainly is going to affect, that's going to affect things. So I don't know. I mean, it is interesting. I think Kathy Woods came out, I think it was last year. She said we're never going to see $100 barrel of oil. I think she might be wrong.
That's why it's going there.
Yeah, exactly. It's the anti Kathy Wood move. But yeah, I mean, we might see it, whether it's.
I hope she has at least a bear market rally, don't you?
Yeah, of course.
I was picking on her. Anyway, so are you looking at any miners yet? I've heard from a lot of fundamental analysis guys that the miners are printing money with current prices, and not just copper miners, silver, gold miners, there are uranium, something that people are starting to gravitate to. Anything else in the commodity environment? And let me ask you, tell me if I'm wrong about this. Apple held up the best during the correction.
Yeah.
Right. So it's the biggest part of the market, isn't it, market cap wise?
Yep.
So as Apple goes, so will the market go. And, Apple had one of the shallower pullbacks. Even Microsoft was deeper, and we know what happened to Facebook, and we know what happened to Google. A lot of them got hammered. Amazon, classic example too of, Amazon hadn't made a new high for such a long time.
Yeah, it's trading sideways.
And then we had this breakdown. So Apple's probably the most important stock for the continuation of any move in the market. You have a wave count on Apple?
I do not have I just lost my, 1 second. Let me get my chart back up. I don't have a wave count. I don't have a wave count on, actually, you know what? Maybe I do. So here's the thing. I have a free newsletter that I put out on Sundays, and Apple was actually my pick of the week. I had a trade through 170. I could share this.
Okay, I'll stop sharing, and then you could do it.
Okay, and I think you have to make me co-host, if I'm not mistaken.
I don't have to now. You just click the share screen.
Perfect.
There you go.
So nice. So I had a trade entry through 170 with a target of 176 and 180. We obviously hit 176.12, which was a 200% extension that I had off of a prior swing high, swing low. So I looked at this as a flat correction, ABC, down to the bottom of that 1618 extension to the downside. And so we came right back up. I agree. I really like, if we can get through that 200% extension at 177.24, we're definitely going to revisit all-time highs. And then I'd be watching for a move back up to 187. And then if we hit 187, I like this as a $200 magnet. I think we'll get pulled right up to 200.
Okay. So you think we're going to take out the C wave in the market, but not in Apple? You think Apple could make a move to new highs?
Also, so the thing is, Apple can make new highs before the rate hike in March. And so I think the rate hike in March, that's going to be the telltale sign. Do we get a quarter point or do we get a half point? I think if we get a half point, I think we're going to be near all-time highs across the board when that comes. And that's going to be the catalyst that either propels us or pulls us back.
Okay. So that would give the Fed the latitude. I mean, Peter Bookvar says the Fed is not data dependent; they're S&P dependent.
Yeah.
So new highs would open that window.
Nice. Yeah, and we have some time, right? We've got about a month, and there's plenty of time for us to continue to melt back up to all-time highs. And I think that's where we'll be when the Fed rate hike comes. And like I said, some people are, let's get the half point, rip the Band-Aid off. Let's just get this over with. I don't know. I mean, I think quarter point could be interesting. Maybe it's neutral, but half point definitely send us lower.
Any view on the dollar? That's our bailiwick here. It doesn't come into your?
It doesn't. I mean, the only thing I look at DXY is mostly an inverse play on the market.
Okay.
Outside of that, I don't look at currencies.
Okay, and the bond market, still, very out of favor now.
Yeah. Again, something that I'll kind of look at, but it doesn't really play into how I trade.
And what's that background behind you?
This is
it's a slide.
This is the Oculus. This is the World Trade Center, the new transportation terminal.
Oh, okay.
So next time you get to New York, check it out. It's really cool. It's like a big mall, but it's this massive structure, and it looks like actually looks like an eagle. It has like these wings on the outside, but it's really beautiful.
We're talking to a guy who loves his city. I'm a Chicago guy.
Okay, cool.
And, so people get us confused. I think we're a lot different, but don't you? Dealing with people in Chicago compared to New York, or
the only thing about Chicago, when I first get off the plane, first place I go is Lou Malnati's. That's always my first stop. That's my spot. But yeah, I love Chicago. I mean, any big city, it's got every big city's got a different flavor. And coming from a big city person, I love big cities all around the world. So Chicago is in there.
You're going to re-up in the Navy?
No. That's well done in the past.
How about your own yacht? Would you be able to sail the world on your own?
I could, but I think I've seen enough of the water and I've smelled enough of the sea. A nice beach house will do me just fine. I'll smell the sea that way. That works for me.
Here's the way. That's as much of a sailor as I've ever been, Danny.
Yeah, I got my sea legs. I've got enough of my sea legs, though.
I could tell from your demeanor you'd be a great techer and mentor.
So I've been told.
But
it's fun.
It is fun. I reinvented myself to do that. I always wanted to share, but what's the best way if people want to check you out and talk to you, for them to get a hold of you? And perhaps, I know there's always people looking to improve and learn from everyone, and there it is, Pup University. So do you need your shots before you? I'm talking rabies, not COVID shots, before you get into your classroom?
Yeah, everybody's got to show their vax card, vaccinated against bear markets. And then you're welcome to come in.
I asked if I could be inoculated against future market losses. The lady didn't say anything. She just looked at me.
I heard they're still working on it. So
yeah,
I have.
So Danny, really a pleasure meeting you. And this is where people could find you.
Yeah, and also on Twitter. I'm very active on Twitter. That's at the Pup of Wall Street, street spelled with an ST. I'm pretty much posting charts and news all day as the market is open till market close. And on the weekends, I put out probably about 20 to 25 weekly charts just to set us up for the next week. So share a lot of free information. The people that come into my university really are the ones that are either novice or intermediate traders that want to just get better. And I'm happy to do that.
Okay. And Danny, I'm glad that our paths cross on Twitter.
Yeah. Same here. I appreciate the invite. I think actually this is the second time we've talked, so I do appreciate your time. Yeah, we spoke early last year.
Oh, okay, Danny. So I guess I've done too many of them, or on early onset dementia is probably a possibility as well. But
PTSD from the market, maybe.
Yeah. So you're already my trading warrior, brother. So
yeah, man.
I want to thank you for coming back and sharing some of your views, and we'll all be watching Apple, and really appreciate you coming here and your giving spirit to share your time and tell us your story, Danny.
Absolutely. And before I go, big shout out to Datadog with the earnings last night. The dog pack, the pup pack is working well, up 11%. So that's my favorite stock naturally.
All right. Well, congratulations on that. And till we talk again, I hope all things are green for you and the people you teach, buddy.
And you as well. And thank you for everybody on the panel and your community for joining in. Appreciate that. And appreciate all of you.
All right.
Take care, bud.
Danny Naz, everybody. That's a wrap. Good luck the rest of the day. You could join the team in 20 minutes for the morning edge. Make sure you shaved. I shaved this morning.
I didn't.
Danny has a good look there. So see everyone tomorrow. People are thanking you, Danny. See you, buddy.
Thank you. Take care.